what they're seeing in China clearly, happened in the last 30, 45 days. And I would argue if you look at other data points, auto sales in China, industrial PMI in China, they all have shown a deceleration. So directionally, I get the logic in what they're doing and what he's saying. But I do think there's a second half of this problem, of this equation, if you may, which is, did they raise prices too far, too much, with not enough innovation? And that's perhaps forcing people to hold off on buying the phones, especially the iPhone XR, which I think was hoped would do much better in China versus what it's doing. So I get what they're saying, but I do think there's an element of less innovation, higher pricing that's driving some of the headwinds as well for them.
I mean, Apple had been pursuing a strategy of raising the average selling price almost religiously, Paul. And in a market like China, they had already been losing market share. And I think that's what people sort of forget more broadly, and that is the local players have been gaining on Apple as well as Samsung. Do you think that this is an Apple-specific problem, or do you think Apple is using China partly as an excuse for the revenue cut?
I think that Apple's problems are much more serious and more Apple-specific than macroeconomic. If I was to roughly calibrate it, I would say 30% macroeconomic, China, U.S. tariffs and trade war, and 70% Apple-specific. So I believe that CEO Tim Cook's remarks last night, as far as the underpinnings to lower revenue guidance, were a bit disingenuous.
What are the Apple-specific issues that you say make up 70% of their serious problems?
Well, first of all, the smartphone market is maturing. It's very much like the PC market as we went from the 80s and 90s into the internet era of the 2000s. And of course, Apple has always been perched.
Do you mean that the old model where everybody felt eager and compelled to upgrade every 2 years is passé?
Yes, sir.
That's the
I do believe we'll stretch out these upgrade cycles. And also, just as the other contributor mentioned, we have a situation where at some point there will be a pushback on price. And we know that the iPhone, at least last quarter, had zero growth with units year to year. And so going forward, all the growth must come from continued increases in average selling price. And at some point, unless that phone is also going to polish your shoes, particularly in the emerging markets where folks aren't that wealthy, you can't charge over $1,000 for a cell phone.
Paul,
and so I think that is a very big issue.
Yeah, does Apple have a second act beyond the smartphone, Paul?
Well, everybody talks about the services business, and I give them kudos for building that, but it's going to have to get a lot bigger, and it's going to have to feature within the services sleeve more proprietary content. Now, they crow about cloud revenues, but the bulk of the revenues are pass-through or toll-keeper revenues from the App Store. At some point, those revenues can be at risk. They need proprietary content. I think what they should do is make a fairly large, game-changing acquisition to get there.
Amit, you also cover some of the suppliers, and they're getting shellacked today on the back of Apple's warning. Your counterpart over at Raymond James made the point that perhaps the suppliers wouldn't come out and guide on their own full years and fiscal quarters because Apple hadn't come out officially and cut guidance, and now they have. Do you think that there's more downside ahead for some of these suppliers?
Yeah, I'd say broadly for Apple, for the supply chain, I think the question, the risk you have right now is there another leg down to estimates in March quarter, or did Apple actually bleed the channel inventory down enough in the $84 billion revenue they gave out for this quarter, right? It's unclear what's happening, but I would imagine that the supply chain will have to deal with a sizable inventory.
Did you just say it's unclear what's happening when it comes to the March guide? Because it seems like you're giving Apple the benefit of the doubt by keeping shares at an outperform rating, and yet it seems like you're unsure as to whether or not they're going to be able to stick with March guidance. That seems like a long runway for potential underperformance versus the broader markets.
Right. On the supply chain side, I think the question is, how much of the inventory drawdown will the supply chain have to contend with, right? That will be a supply chain issue. Apple would not have to deal with that, right? So that's a dynamic there. For Apple, on a valuation basis, listen, the stock has historically troughed around 10 times earnings. That even today would peg the downside at 120. Stock's at 145. The upside on a 15-16 multiple is closer to $200. So risk reward, we think it's attractive. It merits an outperform rating. Purely from a risk-reward basis in terms of what your downside and upside is right now.